Forex brokers are obviously a very, very key part of your Forex trading. Without one, you can't even execute a single trade. Today, I'm going to go over what you should look for when picking a Forex broker, indice broker, or even a crypto broker. All follows the same sort of steps to actually pick the best one. Myself personally, I don't have like a broker I promote. I'm not paid by any brokers to actually promote them. So I'm not going to be like, pick this one, they'll give you this much starting deposit, and then I get £700. I think most of them actually pay per sign up. I get the emails every single day, probably like 2 or 3 a day from these brokers offering me £750 to £1,000 per person I sign up. People should make their own choices. They should look at their own options. It's okay to advise them, but if you're getting paid that much to actually promote a broker, then you kind of see the issue. The first thing you'd actually want to look for is regulation. And this is very, very important. And a lot of traders actually overlook it to then benefit later on with the other steps. You should always be aware of the regulation of the broker you're actually trading with. Otherwise, you don't know whether your money is actually safe or not, whether you actually will ever have access to that money ever again. Personally, I will always use a broker that's regulated by the FCA. So the Financial Conduct Authority, pretty sure it stands for. And the reason I actually do this is your money is protected up to £85,000. So if the broker for some reason goes bust, the company shuts down, your money is kept in a separate bank account, so they can't use your money for other investments, building their own brand. Your money is kept separate from that. And this allows you to actually get your money back through the FSCS, I'm pretty sure. And then you can get your money back. And it apparently is a relatively easy process. I've been watching a few videos recently and seen a few people talk about it. Obviously, very, very rare that's going to happen that an FCA regulated broker will actually go down. But, there always is the chance. Nothing is impossible. There's always a chance that you could end up with a broker that goes under. And let's say you're trading with a broker that's regulated in the St. Grenadines, Australia, Cayman Islands. That's a few that I've actually seen. I'm not sure what the protection is like, but I'm pretty sure these ones that aren't regulated by the FCA or by a reputable regulation, I just stay so far away from them. I've heard stories where people haven't actually been able to withdraw from their broker, and then you say, well, are they regulated? They don't even know. They look it up, they're regulated in some random country, they're just not going to get their money. You might be able to apply for withdrawal, then they'll ask you for information. Maybe proof of address, proof of identity, proof of income. You have to prove all these things before they actually eventually just never give you your money. I've heard cases where that's actually happened, and it is quite sad to see that people do actually get tricked by these brokers, by these people promoting these unregulated brokers just to get that sign-up fee from all their clients, to then just pretty much steal all their money from trading these unregulated brokers. Moving on to leverage, and obviously people that are getting into Forex probably want a higher leverage. They have a smaller amount of capital, they want to make as much as possible. However, if you are trading with an FCA regulated broker, the max leverage you're actually allowed is 1 to 30. However, if you are considered as a professional trader, then you can have access to 1 to 500 leverage. But obviously, this is dependent on if you're a professional trader or not. If you're a normal retail trader, like myself, then it is 1 to 30 leverage. And I personally trade with a 1 to 30 leverage. This won't allow you to do those massive account flips. This won't allow you to flip £10 into $1 million in a week, which everyone wants to do. That's always the goal. But you kind of got to realize, okay, this 1 to 30 might actually help your trading. It forces you to use correct risk management. You can't enter too many positions at the same time because obviously your margin is a lot lower. And it kind of just reinforces the fact that you have to follow the plan. You can't risk the whole account. You'll get margin called, you get stopped out by the broker. And yeah, I'd say lower leverage is actually better in the long run. When you're using these prop firms, the only good thing, well, not I wouldn't say the only good thing, but a pro of using the prop firms is they actually allow 1 to 100 leverage. You can have the swing accounts which offer 1 to 30 leverage, but obviously this is because you're not really going to be using massive lot sizes, using up all the margin when you're swing trading anyway, at least not likely to do that. So leverage, when you're choosing your broker, if you're following on from the previous point of actually going with a FCA regulated broker, then you will have to pretty much manage with that 1 to 30 leverage. People are going to say, oh, I want 1 to 500, I want 1 to 1,000, which some of these scammy unregulated brokers offer, but your money is not safe. Simple as, your money is not safe, and it could pretty much disappear at any time. That company could go, you then go to the FCA or the FSCS and be like, okay, this broker took my money, can I get it back? And they'll just be like, nope, they weren't regulated by us. So then your money is pretty much gone forever and you're not really going to see it ever again. Moving on to contract size, and I wouldn't say this really affects Forex traders, gold traders, or commodities. More to do with the indices that I found personally. And with this contract size, it's kind of the volume that you're actually trading. So this could be, a standard, a nano, a micro, a mini lot, based on the broker you're actually using. You might see some people on US 30. This is where I actually found out about this, over a year ago, and I had an issue. So I was seeing other people trade US 30 with like a 0.05 lot size, but they were making thousands. And I was like, what's going on? I'm using a 1 lot, which is obviously 20 times more, but I'm making 5 times as less. So then I was like, okay, there's got to be an issue here. And it was because of the contract size. Because it was different, my minimum lot size was a 1.0 or a standard lot. And another contract size on a different broker could be, the lowest is 0.01. So you've always got to be aware of this. Doesn't really matter with Forex. I've never had an issue with Forex, but it's better to check the contract size before you actually start trading indices or futures, anything like that on a new broker. What I eventually found out was my 1.00 was actually equivalent to that 0.01. Just obviously my lot sizes looked a lot bigger when I was trading US 30, but then the profit was actually pretty much the same anyway, so it didn't really matter. You just got to be aware of what you're actually trading, what lot sizes you can use to risk that 1%, because you might try and place a big lot size, because that 1 to 30 leverage, that's not going to place. Moving on to spreads. Spreads are obviously very, very important depending on your trading style. If you're a scalper, if you're a person that trades on the lower time frames, then you're going to want tight spreads. You could go with a broker that offers an ECN account or a raw spreads account. But yet again, with the regulation, they won't have as tight spreads as non-regulated brokers. I found personally, all these raw spreads brokers that offer 0 spreads, apparently, EU, fair enough, 0 spreads, but they say they offer it on most pairs. It's not really likely. And even if they do, again, your money's not safe, so you're not really wise to put your money into them. Personally, my spreads aren't too bad. On GU, 0.5 pips, pretty good spread. On gold, a bit higher, around 2 pips. Again, gold isn't great spreads. However, because I don't really trade with like 5 pip stops, 1 pip stops, it's not really an issue for me. I've never really had an issue with actually getting stopped out because of this. But obviously you have to be mindful of this. If you trade on a 1 minute time frame or a 5 minute time frame with those tight stops, you can't have a broker that has 1 to 2 pip spread on these Forex pairs, because you'll pretty much be stopped out as soon as you enter the trade. You probably wouldn't even be able to enter the trade because the difference between the bid and the ask price, which is obviously the spread. Moving on to deposits and withdrawals. When choosing a broker, you have to check which methods of payment, which methods of withdrawal do they actually accept. You might be looking at a broker, you signed up, sent all the documents off, everything perfect, but then they only accept one form of deposit. They can only withdraw with crypto. But then you don't want to withdraw with crypto, because you take your money out, in an hour's time it could drop 5%, 10%, because you know what crypto's like. So you've always got to be mindful of this, because you don't want to have your money stuck in there and you have no means of actually getting that money out, because that again wouldn't be ideal. So just check this before you actually sign up with the broker, how you deposit, how you withdraw, the times that you can actually withdraw. I think some brokers don't allow you to withdraw on weekends. Some take 3 to 5 days. Some promise same day withdrawals, which I've had with the broker I personally use, very, very quick. So just check that before you actually sign up with a broker. The last point is trading platform. This is very important. If you're a person that prefers MT4 and your broker only offers MT5, well, you're going to have to change platforms. You're going to have to go on to MT5. And obviously vice versa between MT4 and MT5. You know, you have C Trader. I don't know what else people trade on. People even trade on TradingView with certain brokers like Oanda. I can't remember any others, FXCM. I think you can actually trade these on TradingView. And obviously it's quite easy. You don't have to deal with the difference in price. You don't have to deal with the difference in the charts and everything. Because obviously what you see there is what you're actually trading, because you're actually trading the broker with the price feed you're actually analyzing on too. So it does save a lot of hassle, especially if your charts aren't really in sync as much as the TradingView you're actually analyzing on. If you guys did enjoy this video, be sure to like and go down and subscribe to the channel. Comment any future video ideas you have for the channel, and I'll catch you guys next time.